Yo, what is going on with the market today? I woke up and I see ZIM hit a 52-week low, Wallgreens hit a new 52-week low, even ChargePoint. And ChargePoint is one of the stocks I actually own in my WeWorld portfolio, which I don't really share. I'll just share that right now just because I like being transparent. I bought shares a way long time ago. Yeah, look at this. This was such a long time ago. It's crazy. 66 shares at $16. I've just been holding this. So that's I've taken a big L on this one. I won't even lie, but we're going to be looking at some of these companies and doing some analysis on them. And the first one we're actually going to look at is Wallgreens, or ticker symbol WBA. So here's Wallgreens Boots. Yeah, look at the stock price. It is not pretty. Yeah, look at this. It is basically at the lowest point it's been in like a decade. So it has a market cap still of 19.54 billion, but more importantly, let's go ahead and look at their numbers. They're not going to look pretty. Oh my gosh, look at these net income losses. Not very good. If we look at total revenue, you'd be like, oh, $35 billion. They must be doing great. But then you look at net income and they're negative 52 million. It's not very good. Operating income looking bad as well. Here's their assets to liabilities. And 1 year ago, it was 66% debt to assets. Now it's 70%. So it's gone up. But their assets have also gone up, but so is their debt by $8 billion. And here's a more important number we want to look at, the operating cash flow. So 1 year ago it was 1.6 billion. Look at this. They used to make so much money, and then look, boom, they dropped off. And the past 4 quarters has just been awful. Now let's go ahead and look at how much their dividend cost them. Remember, they had net income and they have to pay out negative net income, and they got to pay out $415 million every single quarter. That is quite crazy. And they got tons of expenses. Let's see their issuance retirement of stocks. They've been, okay, so it's actually kind of gone down from 1 year ago. We'll say it's flat. So 1 year ago it was 864. Now it's 863. So not too much of a difference. So yeah, now let's look at their dividend. They're yielding 8.48% right now. Would I touch this one? No, because they haven't been able to afford their dividend the past couple quarters, it looks like. So it's going to get cut. I almost guarantee it. Not financial advice, but something's going to happen to their dividend soon. Now let's look at ZIM, man. So who remembers ZIM? Everyone on YouTube was talking about this. Look at this, 144% dividend yield. It was like the holy grail of dividend stocks. But look at it now, at that 52-week low, almost lowest point it's ever been since IPO. And let's go and look at their numbers, because they have to be pretty bad if the stock's doing that. And bad is correct. Negative net income in the past 2 quarters. Look at this. They lost $212 million. Total revenue down like crazy from 1 year ago. Look how much money they used to make from these shipping containers. They used to make so much money. In assets to liability, 54%. So that's actually the same from 1 year ago. But so they reduced their assets, but also reduced their debt. So it's okay. Operating cash flow right here. So this is kind of more important. So they have been making at least a little bit of money, but not as much at all. And I don't know if they'll ever make as much money as they once were, because that was with all the supply chain issues and all that. But let's look at how much their dividend costed them when they did pay one. So here's how much they were paying out. Look at 2022 Q2. They paid out to investors $2.38 billion just in dividends in 1 quarter. That is crazy. And now they have negative net income. So I feel like they should have saved some of that, not preparing for what's coming ahead. So the smarter decision maybe would have been to not pay such a high dividend at the time and keep it for now when time is rough. So cash and equivalents of $1.04 billion, not too bad. But yeah, let me know your thoughts on ZIM, man. Would I pick up ZIM? To be honest, no. I just don't like companies that get to negative net income stages. It's not very good. And once a company cuts its dividend, it's kind of a really bad sign for the future. Cut it once, they'll do it again. But yeah, that's my thoughts on ZIM. Now we can actually look at Chargepoint, CHPT. I don't even know what happened on this today. Let's look at some of the numbers here. This one obviously isn't a dividend stock, but we can just look at it for fun. Total revenue right there. Assets versus liability. They don't have much assets for such a... What's the market cap on this? Oh, it's only $2.5 billion. Well, you know what? I thought it was more than that, because when I invested, it was $16 a share. Now it's $7. Oh, well. You know what? All right, ChargePoint. Okay. Yo, and if you want to see my thoughts on General Mills, look at the price of this. We're on Moomoo here. I just bought a couple shares of my Moomoo account. I just made a video about it if you want to check it out. And if you guys want to support me, check out this video I made about Moomoo. It's one of the best brokerage apps and why it's better than the others. And it would help me out too because I make no money off these videos if you use my affiliate link. So hope you guys have a great rest of your day.